All right, today we are diving deep into eXp's latest annual report. And let me tell you, it is a fascinating read. It's full of some pretty big contradictions, some even bigger bets, and a really clear vision for where they're headed. So let's get right into it.
So, right off the bat, you hit the central puzzle of this whole report. On one hand, you see revenue is up 4%. That's pretty solid growth, especially in a tough market. But then you look at the other side. The company's net loss also went up by about 6.5%. So wait a minute, more money is coming in the front door, but even more is going out the back? How does that work?
And that really is the big question for us today, isn't it? How can a company be growing and losing money at the same time? What is the real story hiding behind these numbers for eXp's 2025? Well, that's exactly what we're here to unpack.
To get to the bottom of this, we really have to look at both sides of the coin here. So let's start with the good news. Let's break down that upside and figure out exactly where that growth came from and what, let's be honest, was a pretty brutal market for real estate. The headline number is this: $4.77 billion. That was eXp's total revenue for the year. Now, a 4% increase, you might be thinking, that's not exactly earth-shattering. But you have to put it in context. With the wider industry basically in a downturn, just holding your ground, let alone growing your top line, that's a pretty significant achievement.
Now, here is where the growth story gets really exciting. While the US numbers were holding steady, the international market was just on fire for eXp. Their international revenue literally skyrocketed by 67%. It jumped from $88 million all the way up to $147 million in just 1 year. This global expansion is, without a doubt, a massive part of their success story.
And it's not just about the money coming in. Take a look at their agent count. The number itself seems kind of flat, right? They ended the year with just over 83,000 agents. But in this industry, right now, flat is the new winning. While other companies were seeing agents leave in droves, eXp managed to hold on to its people and even attract new teams. That signals some real stability. Okay, so we've seen the growth. We get that part of the story. Now we've got to pivot and tackle the other side of the equation. It's time to look at the challenge, that cost of investment, and get to the bottom of why those losses ticked up.
So yeah, this begs the question, right? If revenue is up and the agent base is looking strong, where in the world are the losses coming from? What's driving that negative number on the bottom line?
Okay, let's look at the financials, because this is where it gets really interesting. The net loss went up a little to just under $23 million. But the really telling number, the one you got to pay attention to, is the adjusted EBITDA. Think of it as a measure of the company's core operational health, and it dropped by more than half. That's a huge signal that profitability got squeezed, not because business was bad, but because spending went way, way up.
And this slide tells you exactly where that money went. See, these losses weren't from some kind of failing business model. Nope. They were the direct result of very deliberate, strategic investments. The company poured a ton of capital into things like a new automated payment system, a really sophisticated AI training program for agents, the launch of a global search platform they're calling LIVVE, and a bunch of other major back-end upgrades. This is spending with a purpose.
So you see all this spending, what's the big idea? What's the strategy? Well, it's pretty clear this wasn't just about keeping the lights on. It's a massive, company-wide bet that technology and efficiency are the keys to dominating the market in the future.
And you can really hear this mindset in this quote from the founder and CEO, Glenn Sanford. He says, "We're really in a place to continue to lead rather than follow, and I think that's the real key." See, this is not a company that's playing defense. They are actively spending money to get way ahead of the curve, building an infrastructure they believe their competitors with all their legacy systems just can't match.
The end goal for all this investment is something they call the boundaryless platform. So what the heck is that? Well, think of it as their grand vision for a totally unified global system. A single place where all the cutting-edge tech and a really strong sense of community come together for every single agent, doesn't matter where they are in the world. And of course, a huge piece of that platform is AI, artificial intelligence, and they have a pretty clear game plan for it. Step 1 was 2025. Prove it works. Just demonstrate that these AI projects actually create real value. Now, step 2 is 2026. Scale the platform. This year is all about hitting the accelerator and weaving that AI into every single part of the company. It's a clear, deliberate plan.
So with this huge bet on tech firmly in place, what does the road ahead actually look like? Well, the company is signaling a new focus, and it looks like it's being driven by some new leadership at the top.
And to make this vision a reality, eXp brought in some new key players. First up, you've got Carrie Lysenko, the new Chief Technology Officer. Her job is all about expanding that agent ecosystem and zeroing in on community and communication. And then there's Holly Mabry, the new Chief Brokerage Officer, who's focused on building proactive compliance systems to handle this rapidly changing industry.
And you have to hear this quote from Holly Mabry because it's so telling about the company's culture. She says, "We've made the deliberate strategic choice. eXp will lean in where others go silent." That just speaks volumes. It points to a strategy of tackling industry challenges head-on, everything from compliance to consumer choice, instead of just waiting around for a crisis to hit.
So, what does this all mean for the bottom line next year? Well, the company's own forecast is pretty optimistic. They're projecting continued growth on the top line, with the full-year revenue for 2026 landing somewhere between $4.85 and $5.15 billion. They clearly expect these big investments to start paying off, and soon.
And that brings us right back to where we started, to the one huge, ultimate question that's hanging over this entire report. It's that classic business dilemma. Is all this short-term pain, all these heavy investments, going to be worth it in the long run? Will spending aggressively on tech today truly secure market leadership for eXp tomorrow? Well, that is the multi-billion-dollar bet they are making.